Hi friends, this is Praveen. Welcome to our channel. Hope all are doing good. In this video, I would like to discuss about Ind AS 115 or IFRS 15, that is revenue recognition. I will share an example and I will try to explain in a very simple manner. Also, I would like to explain bill and hold arrangement and revenue recognition in those arrangement which is quite different from the normal scenario. Let's start the video. So here is an example. A company is engaging in a sale of air conditioner. So in this example, let's suppose think a company sell ACs along with a free service. So the worth of transaction is 30,000. So can't you think this 30,000 includes free service cost? Yes, absolutely. So let's first divide what are the promises the company is making to the customer. First promise is the sale of AC and the next promise is a free service. So fine. Now let us get more into this example and let us dig the standalone prices of these two transactions. Like if a company provides service to the ACs, it can charge 5,000. So this is standalone price and the balance will be cost. Fine. So 25 belongs to a AC cost and 5,000 belongs to service cost. Whole together it is adding and giving to 30,000. Fine. So what previous AS says is like previous accounting standard says is a 30,000 amount will be recognized as revenue as and when the sale is made. Fine. But now what Ind AS 115 or IFRS 15 saying is whenever a company discharging or satisfying the promise, at that time only the revenue should be recognized. Fine. In this case, a sale of AC, the promise will be satisfied at the time of sale, and for free service, the promise will be satisfied only when the service is made, not at the time of sale. So this 5,000 we should not recognize the revenue as and when the sale is made. So this is quite interesting compared to the previous AS. So let us dig more into this. So 30,000 is not a correct treatment, but 25,000 and 5,000 is a correct treatment. Fine. So what exactly what exactly the standard says Ind AS 115 or IFRS 15 is first we should identify the contract with the customer. What is the contract here? Agreement to sell the product. Fine. And next we should identify the performance obligation in the contract. What are the performance obligations? One is sale of AC and the other thing is service. Performance obligation is nothing but a promise. The promise makes by the company to the customer. That's it. So sale of AC and free services are the two performance obligations in the contract. Fine. And next you should determine the transaction price. What is the transaction price here? 30,000. Fine. And next you should allocate this transaction price to the performance obligation. We already allocated sale of AC is 25,000 and free service is 5,000. Like if you study more the Ind AS, it will say is we should allocate this transaction price to the performance obligation based on the standalone price. So if company services, like suppose if company provides services, it will charge 5,000. So we taken a 5,000 and 25,000 rest is belongs to AC cost. So fine. And next recognize the revenue accordingly, like as and when performance obligation is satisfied. Fine. Sale of AC, the performance obligation is satisfied at the time of sale, and free service, the performance obligation is satisfied only when service is made. I hope this makes a pretty clear understanding on Ind AS 115 and IFRS 15. That's it, friends. This is a main what I can say is brief about Ind AS 115. Rest you can study as you want. You will understand in an easy manner. But this is a crux of Ind AS 115 or IFRS 15. Fine. If you understand this example and if you understand these steps, everything will be easy. Fine. Now let's dig into our main topic, bill and hold arrangement. So what is bill and hold arrangement? It is a contract under which a company bills a customer for a product. Like billing is done, but retains physical possession of a product. But like in the sense, they will hold the goods and billing is done. That is called as bill and hold. Billing for a product, but holding the goods. So if you read the carefully, a contract under which a company bills a customer for a product, but retains a physical possession of a product until it is transferred to the customer at a point in a time in the future, not present. In the future, it will transfer to customer. Until that, a company will hold the product. Why? Why we are holding the product? Yes, there may be any reason, like the valid reasons are because customer has a lack of available space in his warehouse, like customer not having a space in his warehouse, so we are holding the product temporarily. And apart from that, there may be delays in customer production schedules, like in the fault of customer there may be delays in a production schedule of customer, so because of which we are temporarily holding the goods or products. So in short to say, bill and hold arrangement is a billing a product but holding the goods, but we are not sending the goods. Like I have shown in a image easily, like they are about to keep the product in a car, but it is not inside, it's nothing but available space, there is no space in his warehouse, so that's the reason we are holding the product. Fine, this is an example which explains you bill and hold arrangement in an easy manner. Now let us see what revenue recognition, like what is the treatment of revenue recognition. Fine, as we say, performance obligation is a promise and revenue is recognized when performance obligation is satisfied. Now we should like one should arise as doubts like when the performance obligation, like what are the performance obligations under bill and hold arrangements, and when the revenue is recognized. Let's discuss about these two. Fine, the performance obligations, like what are the performance obligations under bill and hold arrangements? There may be typically two performance obligations. One is sale of goods, one is a primary performance obligation, and the next one is custodial services, which is nothing but a storage cost, like we are holding the goods and we are storing the products, like for which we are charging custodial charges, which is nothing but a storage charges. Fine, this is what exactly about storage charges, you can read through this slide. Fine, like how we should recognize the revenue now. Typically company should recognize when it satisfies the performance obligation. Like when it will satisfy the performance obligation, when customer obtains the control, then only it's said to be that performance obligation has been satisfied. But here customer is not getting the control, right? Under bill and hold transaction, customer does not immediately take the possession of goods, thereby it is very difficult to define when control is transferred to customer. So what it is saying is, that's what that is the reason I'm saying this is different from the normal scenario. So what Ind AS 115 says is, if the following criteria is met, then it is assumed to be customer have obtained the control of product, then we can recognize the revenue as and when the agreement has been entered. First criteria is, the reason for this arrangement must be substantial, like it should be valid, like it should not be the invalid reason, like there is a space constraint or delay in the production schedule, etc. Like that should be valid, the reason should be valid. And the other thing is, product must be identified separately for the customer. If a customer is ordering and we manufacture the product and we kept it separately for the customer itself, like it should be identifiable. And product currently ready for dispatch. And the last criteria is, entity cannot use the product or direct to another customer. Fine, let's quickly recap this. One is, reasons must be substantial and the product must be identifiable, and a product is ready to dispatch, like it is manufactured and kept separately and it is ready for dispatch. And the last one is, it should not use for other customer. So if these four criteria are met, then the customer, like the company, can recognize the revenue as and when it enters into arrangement. Fine, okay. Let's take a small example and let's end up this video. Example is, a company agreed to supply 100 ACs to retailer. What the contract says is, contract is saying where ACs will be delivered, like a retailer's premises. It said what retailers believe is they have sufficient space at the time of delivery. It's a belief, but the end of year what happened is, a company has delivered 90 ACs only, with the remaining 10 ACs at its warehouse for delivery. But due to lack of space, retailers request the remaining 10 ACs be held. Like they are saying to company that please hold 10 ACs as we have a constraint of space. So what the basic question now is, after seeing the video, how many ACs should company recognize a revenue? Simple, 100. Fine. This is what exactly the bill and hold transaction and about Ind AS 115 and Ifrs 15. I made an attempt to deliver as easy as possible with the slides and images, etc. Friends, feel free to ask any doubt. You can mail me or you can WhatsApp me anything. Let's discuss more and let's enrich our knowledge. Thank you for watching. Have a great day. Stay safe and please do like, share and subscribe.